Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York on Thursday, the 25th day of September, 2014, and this is the daily report for gold and silver. We have gold higher, the rest of the precious metals complex lower today, a stock market under tremendous pressure, over 200 points lower in the Dow, substantial drop in the S&P, and a higher dollar today. First, to gold, we're currently trading up about $4.40, $4.50, a 1220.99. Now that's off of a low, and this is I believe, a new intraday low of about 1206.60, high 1224.30. As I had mentioned, the entire complex, except for gold, is trading lower. Silver being no exception to that complex, off about 16 cents on the day. The low is 1734. The high is 1782. Current print is 1752 on the day. So traders, the real question that we absolutely need to ask ourselves is whether or not we have found any kind of real support in gold at around $1,200, because although we've got this new intraday low, and we're taking a look at it right now, according to this chart here, it shows a low at 1207.10, but that is definitely below this low that we received, about 4 days ago. We also have a up day in terms of the candle itself. It is trading higher by about $4. And of course, traders, there's no doubt, even if the market is headed lower, at some point we can expect some sort of bounce, even if the market simply bounces and then moves back into its down channel. Let's go ahead and compress this chart a little bit so we can add a little bit more space and volume in here. We can take a look at the bigger picture. This is, of course, the last couple of trading days right in here. We're getting really a clustered area. And here's what I mean by that. If we take a look at the most recent activity, as this market sold down, it comes down just below the 61% retracement. I believe this was about 73. It pops back up over 1280, just below 1300, the century mark being right here. I'm going to try and line that up as straight as possible. So you can see it comes in just shy. And from there, the market really travels down. Now, during this time it traveled down, there's been very, very few green candles. And those candles have not been clustered together. Market comes down. You get a green candle, red candle making a lower low. You then get a green candle, but you make a lower low here. Then you get a red candle. Now, market then goes into an extended fall right in here. You get that series of red candles. Tries to recoup for a couple of days, only to trade to these lower territories. And now we've got this alternating pattern of red, red, green, red, green. So whenever you start to get that alternating candle color, such as right in here, it is attempting in some way to form some sort of a base to see if there's any kind of potential support. And my question is, are we going to see that happen here? So traders, what I have done is I've created a basic Fibonacci retracement. And what I'm looking to accomplish within this retracement itself, there are two of them. Our starting point is from this particular top up at 1342. And then I've got another one starting at 1297, which is this top, both culminating at these current lows at around 1205 according to this chart. Now, based upon that, I've got both 23% retracement levels and the 50% retracement level from the shorter of the two retracements, meaning this retracement here. And the reason for that is my assumption is, let's look at a possible model in which we see the market bounce back up and then hit resistance before going to a lower low and then tagging this double bottom here at 1180, which I still believe is absolutely possible. We've had no evidence whatsoever, and we couldn't on a technical basis, that the corrective action that we've seen recently is over. However, we wouldn't get that until we started taking out some of the more recent highs. What we have gotten is a lower low. So that's really what we have to go with. So under the assumption this market pops up before moving lower, where in fact could we see this bounce take us to? Well, 27, 37, 37 being a 23% retracement, and that's a retracement of this larger move right here, back up to here. 37 would be here. 50% retracement of the smaller move takes us to 51, which, by the way, is a 38% retracement of the smaller move. I just didn't want them kind of clustered together. But we do get a harmonics at around 1252, 1251. We talked about this the other day. We put one of these up. So for that reason, let's see if we can get some kind of closing action over 27 and follow through. We might see this market climb as high as 37 to 51 before moving back to lower pricing. So traders, as you know, really the big news has been the dollar. We've got the equities markets, that's right here, and that's under tremendous pressure today. We could be at the tail end of something in which we're looking at some sort of a retracement, although all of the retracement we have seen up till now have been very, very shallow. We'll have to see if anything develops that's different. Dollar index, when we look at that, it makes this new extreme high here. It is a green candle, meaning it is closing higher than the open, but it is well off of the highs, but it's also made a new high on the day. So we still have that dollar, and that dollar is going to be putting pressure on gold in particular. And then lastly, I want to take a quick look at silver. I've not been real excited about silver, as you know. We've kind of been on the sidelines. And the key right now is that we've identified a couple of different areas that we are going to at least look for some support. And I'm talking really about these particular, as the market comes up, you get some resistance in this area, trade sideways for a while, but there's really, really strong support, and this support is coming in just around $17 per ounce to maybe $17.20. Market's trading at $17.49. The key is it just going to barrel below that? Because if it does, traders, when we compress this chart, one second, and of course what we're looking at is a weekly chart, we can see a couple other areas where the market could logically go to. If it breaks through that particular support level, and again, I'm going to try and draw this in as straight as possible, I'm basing it upon just straight trend analysis and support levels. We have these various bottoms, and the various bottoms and tops are where we look at for resistance and support. But my point of the matter is, if it breaks below $17 per ounce, and I'm not saying that it will, but if it does, we don't on a technical basis have any really strong support coming into the market till just above $14 per ounce. So we definitely need to be cautious about that. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.